Adobe is the dominant force in creative software. Hollywood films, advertising, visual effects, web design, YouTube production, Adobe tools sit behind almost everything. And for years, the company has behaved as if this dominance gives it permission to push users as far as it wants. Hidden fees, confusing terms, asset-related concerns, even a lawsuit from the US government. Yet the real turning point arrived when a new competitor appeared. This competitor has just completed the largest IPO of 2025, and what happens next could decide the future direction of the creative software industry. Strangely, Adobe played a direct role in creating this threat, Figma. Even stranger, the story begins with Adobe's attempt to acquire it. Adobe wanted Figma, but not for the reasons many assumed. To understand why, you have to look at Adobe's acquisition history. One deal in particular reveals the pattern. In 1994, Aldous owned Freehand, a rising challenger to Adobe Illustrator, one of Adobe's flagship products. Why acquire it? Not to run two competing illustration tools, Adobe wanted to eliminate the competition. This strategy is common in tech. When a smaller rival gains traction, a larger company can either outperform them or buy them outright. Even at a high cost, removing competition protects future revenue. Regulators noticed. As the Aldous deal neared completion, the Federal Trade Commission intervened. Adobe could keep Aldous, but Freehand had to be sold. And Adobe was banned from buying it back for 10 years. Regulators clearly understood Adobe's intentions, and this was only the first chapter in a much larger pattern that would shape the industry for decades. After the FTC blocked Adobe from taking Freehand in the Aldous deal, the story did not end there. Years later, Freehand's parent company was acquired by Macromedia, and in 2005, Adobe bought Macromedia. This time, they finally gained control of Freehand. Along with Illustrator, they now owned the two established illustration tools on the market. Almost immediately, users saw what was coming. Development on Freehand slowed, then effectively stopped. Adobe was phasing the product out, and it quickly became obsolete. Long-time customers were furious. Many argued that Freehand remained superior to Illustrator in several areas and deserved ongoing development, not abandonment. The backlash soon grew into organized resistance. A group called Free Freehand formed, gathering around 5,000 users. They filed a civil antitrust complaint accusing Adobe of violating federal and state laws by abusing its dominant position. The complaint argued that Adobe had deliberately engaged in anti-competitive behavior to eliminate Freehand instead of competing on merit. Some users pushed for Adobe to release Freehand as open-source software if the company had no intention of developing it. Adobe declined. The lawsuit was eventually settled out of court, and on Freehand's official page, Adobe made its stance clear. While they recognized Freehand's loyal following, users were encouraged to migrate to Adobe Illustrator. Adobe was not hiding its intentions. They wanted users on their ecosystem and nowhere else. And after Freehand's demise, the situation for creatives only deteriorated further.
After Freehand disappeared, the pressure on creatives only increased. With no meaningful competitors left, Adobe secured a near monopoly and began shifting its entire business model. Instead of selling software you owned, Adobe moved to products you could only lease. Software as a service became the center of its strategy. The financial results were immediate. Revenue climbed quarter after quarter as subscription income poured in. But the shift also gave Adobe something far more powerful. Under a subscription model, users no longer controlled their software licenses. Adobe did. And that imbalance set the stage for the problems that followed. The most contentious issue was the fees. Adobe promotes Creative Cloud with a subscription structure and advertises a 7-day trial. On the surface, the terms appear straightforward. You pay monthly. But in reality, most users are enrolled in a yearly contract paid monthly. Adobe does offer a true monthly plan, but it costs around $90 per month, which subtly pushes customers into the cheaper annual option, where the traps are waiting. If you pass 14 days, you are locked in. The moment you try to cancel, the hidden cancellation fee appears, 50% of the remaining contract charged up front. Many users only discover this when they're hit with unexpected charges of hundreds of dollars. To make matters worse, auto-renewal cannot be disabled. The only way to stop renewal is to cancel entirely, which triggers the same penalty. The industry had shifted from ownership to dependency, and for many creatives, there was no alternative left. Adobe had removed too many of them. With Adobe holding such a strong grip on the market, major alternatives struggled to gain ground. Even giants like Sony with Vegas or Apple with Final Cut Pro could not meaningfully challenge Adobe's position. For many creatives, it felt as though Adobe controlled every viable option. And then in September 2022, Adobe revealed the next step in its strategy. The company planned to acquire Figma for $20 billion, the largest purchase in its history. To understand why this deal caused an immediate outcry, it helps to look at what Figma actually is. Figma is a UI design platform built around real-time collaboration. Teams can work together on product pages, landing pages, app interfaces, brand systems, and more. Most of this can also be done in Adobe's ecosystem. So why was Figma gaining such strong momentum? Because Adobe's all-in-one approach comes with a cost. Its software is powerful, but often bloated, heavy, and prone to crashes, a familiar experience for anyone who has watched Illustrator fail repeatedly during intensive work. Adobe wants its suite to cover everything, and that ambition results in tools that demand high performance from any device. Figma took a different route. It focused only on design, kept the interface light, and even worked in a browser. Combined with a generous free tier and no hidden fees, it became an appealing alternative for teams tired of Adobe's aggressive subscription structure. So when Adobe announced the acquisition, Figma users immediately saw the danger. This looked exactly like Freehand all over again, a strong competitor being absorbed before it became too big to stop.
As Figma users braced for the worst, the backlash wasn't limited to the design community. Regulators across multiple regions began scrutinizing the deal. Although both companies were American, Adobe's global footprint meant overseas authorities also had a say, and several were unconvinced. The first major obstacle came from the UK. Britain's Competition and Markets Authority, CMA, concluded that the acquisition would reduce innovation in tools used by the vast majority of UK digital designers. The European Union echoed the same concerns. Both regulators argued that Adobe absorbing Figma would weaken competition in a market where Adobe already held overwhelming power. For a full year, the merger faced roadblock after roadblock. Every attempt to push the deal forward met resistance, and in the end, Adobe backed down. The acquisition was abandoned, leaving Figma independent. What many thought would be the end of Figma instead became the beginning of Adobe's real problem. The collapse of the deal marked a turning point. Adobe had intended to neutralize a rising competitor. Instead, its failure set off a chain reaction that would ultimately strengthen Figma far more than any acquisition ever could. And at the center of this shift was a single clause buried deep in the merger paperwork, one that would force Adobe to hand its rival an extraordinary financial advantage. When major companies prepare for acquisitions, they often negotiate a reverse breakup fee to protect the smaller firm if the larger buyer fails to close the deal. Adobe and Figma had such a clause. According to the agreement, if the merger collapsed, Adobe would owe Figma a $1 billion cash payment within 3 business days. That is exactly what happened. Adobe paid $1 billion. And for perspective, Figma had raised only $333 million in total funding up to that point. In one stroke, Adobe handed its rival almost 3 times the capital it had accumulated in its entire history. $505 million in 2023, rising to $749 million in 2024, a 48% increase. Unlike many high-growth tech firms, Figma was profitable.
In Q1 2025, it generated $45 million in net income with a 17% margin.
As Figma strengthened, Adobe found itself under far more scrutiny. The frustration around cancellation fees had grown for years, and regulators were no longer willing to overlook it. The U.S. Federal Trade Commission, led by Lina Khan, well known for her stance against monopolistic behavior, launched a lawsuit directly against Adobe. The complaint argued that Adobe only revealed its early termination fee at the point of cancellation, turning it into a retention weapon that trapped users in subscriptions they no longer wanted. The FTC took the matter seriously enough to go beyond the company. Two executives were targeted personally: David Wadhwani, president of Adobe's digital media division, and Maninder Soni, a senior vice president in digital sales. At the same time, Adobe was trying to capture the momentum around AI, but the company's approach raised more concerns. Adobe added terms granting a non-exclusive, worldwide, royalty-free, sub-licensable license to use and display user content. For creators working under NDAs, including those in film and commercial production, this clause was unacceptable. After significant backlash, Adobe reversed course, but the damage to trust was already visible. Even with these shifts, Adobe's AI strategy was not performing as expected. The stock stalled, then began slipping. And it was at this moment that Figma stepped forward with its boldest move yet, entering the public markets to challenge Adobe on a scale the industry had never seen. On 31 July 2025, Figma went public. Shares were listed at $33 each, valuing the company at $19.3 billion. The demand, however, was overwhelming. The stock opened at $85 and surged to $124 at its peak. By the end of the trading day, Figma's valuation had reached $68 billion, and the company had raised $1.2 billion. It was the largest IPO of the year. The surge didn't last. Since the listing, the share price has fallen by more than 50%, but the drop isn't as dramatic as the headline suggests. The IPO was heavily oversubscribed, with investors placing more than 40 times the number of orders available. Such feeding frenzies routinely inflate prices. Airbnb and Snowflake experienced similar spikes during their debuts. Figma, therefore, isn't alarmed. The company now has capital, scale, and time, but also a far larger challenge ahead. Adobe remains a giant. Yet the goal isn't for Figma to destroy Adobe or vice versa. The real value lies in competition. Lina Khan highlighted this in her public statement following the IPO. Allowing startups to grow independently instead of being swallowed by dominant firms can generate enormous value for employees, investors, innovation, and the public. Even those frustrated with Adobe recognize the same point. Markets only work when companies compete by improving product, not by eliminating rivals. Monopolies reduce quality and increase pressure on consumers. With Figma rising, the industry may finally be entering a healthier era, though only time will confirm it.